Start recording and stop. Why this? Oh, this is part of the template. Okay. That's what I was saying. This date is. We should change it. It's not 14, it's 16. Oh, forget about it. Okay, so how you all doing? Yeah, hanging in there. Everything is fine. Good. All right. Hey, Miriam, how are you? Jack, what's up? Okay. It's still hurting. It just took a couple of Tylenol. Not Tylenol. Advil, I guess. Kumar, how are you, man? All right. So everybody here. All right. So let's get started. Let's get something straight. We're gonna do this about the Fibonacci tool. This is what I have it here, right? Let's delete this. All right. We'll pick a random pair, for example. Let's say euro pound. We usually don't, do the analysis on that. So just pick that pair. Just want to show you something, and then I'll remove all these levels. Forget about these levels. Make it plain. But in fact, still the monthly. Whoops, it has everything. All right, forget it. Even if it does, who cares? I'll remove this one. Okay, so let's get started. Now the Fibonacci is. Do you know where what is this name? Where this name come from? Anybody know about it? What do you mean by Fibonacci? What is it? Is it a name or? Right, you got it, Marian. Good. It is a I think it's Leonardo Fibonacci was his name. Italian dude, right? And he was a mathematician. He was, studying pyramids and this and that, and then he, fumbled upon this discovery, and it's called Fibonacci series, basically, right? I don't want to go, too back in the detail that how all these Fibonacci numbers shows up in the nature and this and that. I can do the video on that later sometime. But today, the basic is that what is Fibonacci series is that you have like let's say 1, and then the Fibonacci series, right? And then the next number is also 0, 1. Then you add 0 plus 1. The next number comes is 1. Let me see. Put the 0 here as well. Right. So the first number you have is like, for example, is starting from the 0. The series starts from 0. Is it 0 or O? I probably made O, huh? No, it is 0. So 0, 1. Then you add 0 into 1. The next following number in the series comes, which is 1. Now the last two numbers you add 1 and 1, then the next number would be in the series 2, right? And then the last two numbers, add the last two numbers 1 and 2 is going to be 5. Then add 5 and 3, the last two numbers, you will get 8. And then add both last two numbers 5 and 8, you get 13. And so on and so forth, 34, 15, 55, 89, and this and that. So this is how this series is. What is the beauty of this series? You take any two numbers, for example, down the road, if you add, 5 and 8 is 13, 13 and 8, I think it's 34, and 34, next number is 55. So if you have the calculator, if you see any two numbers, for example, you take 55 and 34. So you divide 55 into 34. So 55 divided by 34, you will see a number 1.618. Okay. And if you do the opposite, means if you divide 34 by 55, you will get 0.618. Okay. Now you take if you can continue with this series for thousands and thousands of numbers, and any two numbers you take, consecutive two numbers, and divide into each other, you will get the same answer, 1.618 and 0.618. All right. Now, so this is the number 0.618 is that's what they call its golden mean, and this is the major number. Like I said, I don't want to go into too much detail. You know how you open up a circle and then rectangle, also the perpendicular and this and that. It's all mathematics. So that's not our objective here. But this is the main. So this is basic series, and the beauty of the series, the main concept of the series, that you take any two numbers, divide into each other. Either you get 1.618 or 0.618. So, for example, the tool we have, this tool here, okay, this is the part of the empty 4, and you have all these numbers. I add all these numbers, and most of the people do that. All right, but where all these numbers come from? Anybody knows? Yeah, Marian, you have any idea all these numbers where they come from? Okay, you know that yeah, 0.618, right? Is that the thing? Is divided by 100, it becomes 61.8%, right? Out of 100, for example, you can see the 2. We have this 0, 0, and then we have the other end is 100, right? So if this move, we are measuring this move. For example, forget that move. The last move is this, right? This is the bottom, this is the top. So move starts from here, right? And goes all the way there. Oops, the opposite. For example, this is. So we need to see that, how much it retraces back or retraces cover. So this is, for example, this is 0, this is 100, or you can call it 1. It's 1 unit. And half would be what? 0.5, right? Or 50, 0.50, right? So a little bit more than half is 61.8% out of 100. Okay, or you can say if you call it 1, then it is only 0.618. Right? So we call 0 to 100, out of that 0 to 100 unit, this line is 61.8%. Percent means out of 100. Per means out of, cent means 100. So percent out of 100. So this is all, from 0 to 100, this is 100. So this retracement, if the price comes down here, so it is 61.8% of, means that 61.8 part of this whole move. Okay, a little bit more than half, it recovers. So this is a retracement tool, and this is what it means by 61%. But tell me, what is this number, 78.6%? Where did that come from? Why not only 70% or 80%? 78.6. Why do we put this 78.6% here? Why not 79 even, or 80? Anybody knows where that 78% comes? Marian, do you know that? It is related to, but no. But where you come up with the calculation? It's 78.6%. Where it come from? Mathematically, these are all mathematics. These are numbers, right? We call numbers mathematics. No. You don't do. Mathematics. You don't say in English. Mathematics. You use calculator. Okay. No, it's at the square root of 0.618. Do you know what a square root is? A square root of 4 is what? Anybody? 2, right? Okay, so if you pick up your calculator and you go 0.618 and hit the square root button, then it will give you 0.786. Got it? All right. Now, if you go, you know what reciprocal is? Means you divide 1 by any number. That's called reciprocal. Okay. So now we use reciprocal of 0.618 means 1 divided by 0.618 1.618. So what do you get? 1.618. Our other famous number, which is a part of the Fibonacci, right? When two numbers you take and you divide into each other. So we have that somewhere here, down here. So and and let me see. It's too much. Okay, now if you do a reciprocal of 0.786 means 1 divided by 0.786. 1 divided by 0.786 is equal to 1.27, which is our extension number. I always tell you, right? The 127 and 1.618. These are the extension numbers. Okay, so what I'm showing is that all these numbers are related in each other in terms of mathematics. They are either now, for example, 0.618 times 2. What do you come up with? 1.236, 0.236 number, our 23.6% line, right? You come up with that. Now, the square, the 0.618. I didn't do it for a long time, so I forgot. 0.618 square means you multiply 0.618 to 0.618. So, times 0.618. Then what do you get? You get 0.382. That's the other number right here, this one. Right? And 50% is just the 50% of the whole thing. That's not a Fibonacci number. It's just, if it is 1 from here to here, half is, we call it 50%. Simple as that. Right. Yeah. You got it, Morgan. 0.7866, the square root of that is 88.6%, which is right here. 88.6% next to 78%. Right? So if you go reciprocal of that, 1.88, 1 divided by 0.886, you will get 1.128, which is right here. You understand? And if you take the 50%, square root of 50% is 0.707, which is right here in between 61% and 78%. And reciprocal of 0.707 would be 141.4%. So now you know all these numbers are either reciprocal, square, or square root of each other. Okay, so this is how we come up with this Fibonacci 2. I don't know what is that, Morgan. I'm not a mathematician. I know a little bit, I'm always, math and physics were my favorite subjects in my studies days. But yeah, so I understand this, this is how all of these numbers are related to each other, right? So now you know that what is the golden mean is 0.618, and starting from there, it becomes all this number comes one by one, and then we plot and within this thing. But how do you add these numbers to your tool, and how you remove it? Do you know, Marian? Do you know that how you add a number in the tool? Okay, and how do you get this price here? Do you know that in the price next to the level? That's I have it like 61.8%, and it tells you the number. That's it. Everybody else knows, right? Just percent sign and a dollar sign, and then it gives you the number. So far so good. I don't have to show you that. So it's very easy. You just go on a properties and the fib level, and then this is how it is. See, I have the the level, and in front of that percent dollar, and that's it. And you can just add the number. If you want another one, you just put the levels price there, and then percent wise and percent sign and a dollar sign, and that's it. You can continue adding whatever you want to add. That's no big deal. Okay, get out of here. All right. So this is how it is. But how do you use it? You have only one. Where is the other tool, by the way? You have two Fibonacci tools, right? This is the one we use for a retracement. We have another one. It's called expansion, right? Fib extension, expansion, whatever. Usually it is not shown when you open a new MT4, okay, so some of the new people here, so I'm gonna just show it to you. This is a retracement, Fibonacci retracement tool. You have you have to right click on it and then customize, and Fibonacci expansion will be on this side. So you select that and you go insert, and it will come here. If you want to remove, like for example, this is right here, expansion, right? If I want to remove, I'll press this and it will come down here. But I want to add it, so because this is a very important thing, right? So it is called Fibonacci expansion, and you must have it. So now you bring it to this side, so you can see it here, right there, right? This is for a retracement. So once the move is done, it retraces itself, right? Sometimes 38%, sometimes 50%, 61, 78, whatever. So this tool measures the retracement. Which one? The first one, the one we were working on. And this is a 3-pointer tool. This is expansion. This is for the targets. This you measure the move in question, and then basically you're going to measure or see the target, how far the current wave or move is going to be compared to a previous move. For example, this is the previous move, let's say this one. Well, after the move, after the retracement, actually, this we cannot say the retracement here. And let me see, I'm gonna go weekly. For example, this, right? This is a higher high for this. So we will say this was the move and this is the retracement, right? Okay. So now the prices start going up, and we know that it's a small head and shoulder pattern. This is the left shoulder. This is the right. This is the head. This is the right shoulder. You see this nice after on support. You have a nice head and shoulder pattern here, which requires an up move. Fine. You first bullish candle here, and you'll see, okay, it's going up. So how far? That's the question. So this is the tool that we use, and this is a 3-pointer. And why 3-pointer? This move, we will measure your upcoming move. We want to see how far it will go, and so, obviously the move is not there to measure. So we compare to this move, which already happened. Okay, so which one? From here to here. Here. All right, so we're gonna measure upcoming move with in terms of this one, that the move already happened, this one, and the new wave started from here. So we will measure this move compared to, we will going to compare this and measure this move, that how far or how big it is compared to this one. Is it equal to this one, or it is going to be more than that? And those two extensions beyond 100%, for example, again, this is 0, this is 100. So if you say, okay, 100% would be from starting to the same length of this move, which you can easily do this. Okay, this is, it's gonna be, man, for example, here, right? So this is 100%. But what are the other levels and important levels, Fibonacci numbers that comes beyond this 100%? So so we can be aware of those numbers and make our move, or take the trades, or whatever we need to be doing. Those important two numbers beyond 100% is 127 and 1.618, right? We just measured that these are the 127 is the reciprocal of the square root of 1.618, and also reciprocal of 0.787. So that's the next number. And obviously 1.618 is the square root of 0.618. So these are the two expansion numbers, very important. If it is 100%, then probably 127% is somewhere here, 1.618 somewhere. So we add those numbers in this tool, and how you use it, that you first pull the fib from here to here, right? This is our the move that we are going to compare the current or upcoming move, right? So this is point A, B, and then this is a third pointer. You will place right here in the beginning of the move. And now you want to see that, how far it goes. That the targets are 127% and 1.618%. And usually this number, I always have this. Okay, it's 141.4%. So these are the final targets. Let me show you a diagram, and you should all have it. This is how this tool works, and yeah, we call it like AB is equal to CD, and it's exactly at this level it is equal to CD, AB, right? This is C and D. It is 100% means it's equal, but it could be AB is equal to CD pattern is, this is 127% or 1.618%. So usually what happens is that if you have moved from A to B, and then either 61% or 78%, for a Gertley pattern, and after the Gertley pattern, you measure that tool from here to here. Third point comes here, and then the move starts, and you will watch it that if it is breaking this point, it's going above it. Um, B point, this one here, right? And if it goes above, then it will go to usually to 100%, and if from there it goes to 127%. If break that, 1.618%, giving all these other SNR levels that we plot on our chart, and then we see that which one is coming very close to these Fibonacci number as well, because then it has an effect of magnetism, right? Become magnet. If you have 1.618 and there is a big strong SNR number as well, then that level will become very magnetic, and the price usually go and kiss that area. So this is what this where it goes. This is the expansion tool actually, right? This is how you use it. Um, where's the other chart? I'm good. Okay, now this expansion tool and retracement tool. You see when you're going uh, Elliott wave, for example. Let's look at this chart here, right? This is wave 1, 2, 3, 4, 5. 5 impulse wave going up, and then 3 wave coming down, ABC. Yeah, it's very easy to say that, yeah, this is a phenomena, this is what happened, but how the heck we know what is A, and how far goes 2 and how far goes 3, and where the fourth is going to stop, and then how far after that the fifth is going to go. So these are the areas, these are the moves that are, like in history, if we go back and we see that they happen again and again, in the same fashion. And then based on that information, we measure them and then come up with the very approximate, calculation that can, if your wave 1 is this, then wave 2 would be this. And from there, wave 3 should be this far. It should go this far, and then wave 4 it is, this much, and then wave 5, and then, this wave A of the retracement usually comes back to the wave 4 area. Then the wave B, it goes up around the high of wave 3, make a head and shoulder kind of pattern, and then wave C comes to around 50, 61% or 78%. Then you have a higher time frame, wave 1 and wave 2, after all these mumbo jumbo happening on, for example, let's say this whole thing you see 1, 2, 3, 4, 5 ABC on an hourly chart, which will be finishing only wave 1 and 2 of a daily chart, followed by a big huge wave 3 like this one, from 2 to 3, right? Consists of 5 waves, and each wave will have all sub waves and all that. So this is, Elliott wave and harmonic pattern. Now harmonic patterns I explained already, and you all probably know that they are exactly Elliott waves, just you look at it in a different angle, that's all. Okay, I'm showing here there's a straight wave 1, wave 2, but usually this is the area when the price goes up in 5 waves, 1, 2, 3, 4, 5, and then comes back like A, B, C, around 61% or 78%, making a Gertley, a bullish Gertley, or a bad pattern in this area. Okay, I don't know if I have those chart here. Oops, nope. Yeah, like this one. You see here, This is how it is. It's wave one, and then you have ABC correction around either. I said, I wrote here bullish bad. It could be a Gertley as well. Okay, Gertley or bad. These are the two retracement patterns. Okay, when you are retracing a move, not going beyond the starting point, but staying within or above this starting point, which is X here, and then breaking this, the end of wave one. Okay, if you go in that direction, so this wave 2 would be just a retracement. This would be not a retracement to this drop. This will be an impulse wave, and this will be called an extension, and we will use the other expansion tool, fib expansion tool, to measure this length, this wave 3. Then the wave 4 will be a retracement, and then wave 5 again will be an impulse wave, and we will measure that with the other tool. So these both tools, here you use the measurement retracement tool, then wave 3 expansion tool, wave 4 retracement tool, wave 5 expansion tool. Okay, so all of those tools are used to measure these Elliott waves. Okay, now so far, Marian, any question about the tool itself? You know that where the number comes from, and all those numbers are related. You know how to add them, and take it out if you don't need. And also, I have given you the that template, Euro USD monthly chart, and all those templates made for bad and butterfly, and this and that. They are all on one page, so you can just open up and apply that, and whatever the pattern you need, you just pick it up from there. Whatever the Fibonacci tool you need. Okay, so you cannot see all the other levels, unrelated levels at that point. If you want to measure just Gertley, so you want to see where's the 61% and 78%. That's it. Not all those nonsense numbers, right? Okay, so once you're asking, so once point D is above point D. What does that mean? All right. Yes. Yeah. Yeah. Well, not once it is above, but if you look at it, if you understand a little bit of Elliott wave, you will know that this wave will be going above. Okay, you will know in advance. You will have the idea. Not necessarily that will happen, but usually you will know exactly. All right. Anyone, Marian? Am my sound is okay, or is it in and out? Because Bella is having problems, so I don't know. Is it fine? It's not in and out or cutting or anything. All okay. All right. No, so Bella, it is. Let me just give her the private message here. It is only you. Okay. So I sent her the message. Maybe her computer or something. Anyway, so yeah, if like I said, Marianne, if you know the Elliott wave a little bit, then you will understand that it is going up or down, because like I said, if you can count somewhere for example wave 1 2 3 4, or maybe completely 5, then you expect a wave A coming in the territory of the last wave 4. For example, if I want to give you an example, I will go to USD. It's clear. Um, don't worry, Ahmed. You will see the recording. Not a problem. Hold on just a minute. For example, if you look at this big thing, for example, this is wave 1, and then a big side wave 2, right? And then it goes wave 3, big one, right? And then wave 4, and it's like an ending diagonal, very, very painful, slow move to the upside for wave 5. Once that finish, wave 1, 2, 3, 4, 5, I'm not showing here Elliott wave here. Weekly chart, can I chart turning to? I don't want to mess up that chart. Let me see. Weekly, and the indices and the US dollar index. turn into weekly. Let's see if I open this, and maybe I'll turn into, no, I'll do weekly, and I'll do this. So maybe here you can see that if ABC correction, for example, this could be A, B, and then I would say from here, this is wave 1 here, right? And this is wave 2. So measure this. Okay. So this one came little more than 50% down, very close to 61%, right? So 61% A, B, it's A, B, C, small correction. I mean 61% correction, but the ABC is not very clear. But then you have wave 3 coming in. I just showed you the phenomenon, right? So wave 3 usually goes to 1.618 of wave 1, right? So wave 3, I would say it's here, right? Let me see if I can, oops. If this is wave 1 here, so you see, if you have something like that, and if your eye can catch it, then you start measuring these things. And if you can measure and pinpoint that what's happening, then you can really understand that what's coming up, and you can trade very nicely. So, for example, this is wave 3 here, and this is wave 4 here, right? And this is wave 5 here. So if we just measure this one, this is 61%. Now, if I can, you see here, this is the Elliott wave, wave 3. This is how it happened. 1, 2, 3, 4, 5, A, B, C, correction, wave 2, and then it goes in 5 waves, 1, 2, 3, 4, 5, to finish up a wave 3. But how far? Wave 3 usually breaks the channel upper TL and goes for FE 1.618 of the wave 1. Now we need to make a new channel or whatever. So it's supposedly going go for wave uh, 1.618 of wave 1. 1.618% of wave 1 means equal to that would be 100%, but wave 3 should be more, 0.618 more than the wave 1. So how we measure that? We measure with the Fibonacci expansion tool. So we go there, and then we see that if this wave 3 from here to here, is that the case? So oops, where'd the tool go? Here's the tool. So we're gonna place this. This is wave 1 from here to here, right? And then this wave 2 is here. So you see wave 3 went a little bit beyond 1.618, but it went up to 1.618. So that confirmed that this is wave 3. And you can see the small wave 1, 2, and then 3, 4, dip this wave 4 and this 5, finish up wave 3, right? So this is how you measure wave 3. Now wave 4 is a retracement, so we don't use this tool again. We need to use the other one, the retracement tool, to measure the wave 4. So I'm gonna open up a little bit. It's just shrinking. So wave 4. Now here again we go back to this diagram and see. We will try to see that how much we need wave 4 retracement. Wave 4 retracement. How come I didn't write it here? End of wave 2 create. Oops, where it says, man. All right, somehow I don't have it here. Wave 3, I know. Okay. Anyway, wave 4 is usually, maybe it's some other diagram. I'm just getting confused here. Maybe here. Wave 3, wave 4 should be. Let me see. It's 38%, but where does it say? I have. I don't know, with some other diagram. Anyway, let's go back here. One, what are you talking about here? Right? All right. See, the thing is that the correction is also, you have to see that you have to understand the whole thing, that how it works. For example, a correction is ABC correction, right? Anything. For example, any correction is ABC. So sometimes what happens is that you have this, basically I would say this A, B, small a, B, and then wave C is the big one, and it is only a correction. And wave C usually comes with the 5 waves. So if you measure from here, you may have the calculation, you may not. Let's see from here. That's why this Elliott wave is now, see, if you measure from there, then wave 2 calculation is a little bit crooked. It's only 38% retracement, which is not the characteristic of wave 2. So you have to see that what happened in the background, all the way in the back, if it is a correction only. Now, if I go monthly chart of this USDX, this is all I have. So you can see this is all correction. It's like A, B, C, right? And even C is also A, B, C in 3 wave. Here you can see it's wave A, we can see small b, and then 1, 2, 3, 4, 5, wave C, correction finish. Then you are seeing this A and B and C, I'm just showing you, right? On the daily chart, it's A, B, C. It could be just A, and then you will have a B, and then a big C come down. Anything can happen, right? So if you have 3 wave, that 3 wave, for example, here, see A, side wave B, and C. But this ABC is not the whole correction. It is only wave A. Then you have wave B, and then you have wave C. So you have to measure also in time. If I go in detail, then it will be, I'm going to be off track. That would be an Elliott wave uh, uh, webinar rather than the Fibonacci. So that's why I'm going to stick to this Fibonacci thing. Okay. So how to measure these things? So if that's why I'm starting from here, because I can show you this. If that is A and B and this is C, out of C you have this 5 wave correction. So 1, 2, and then 3, wave 4. Wave 4 usually is only 38%. So we use this tool again to measure wave 4 from the beginning of wave 3 to this wave, the whole wave 3, and then see wave 4 where it comes exactly. So it came exactly back to 38%, right? So it's very short. Supposedly it's like A, B, C. Sometimes it becomes a triangle, right? Very nasty, very painful triangle. So what it does is that it's A, B, C, D, E, on the side, and then it goes up. And triangles are in 4th wave is very common. But in this case, it was a very fast. Why? Because there's something called a law of alternation in Elliott wave, and that is that if you have a wave 2, a fast drop, then you will have a nasty triangle on in wave 4. And if you have a wave 2, a side wave, long painful wave 2, then you will have a fast drop in wave 4. So it looks like that we have a very side wave. You see this wave 1, and then wave 2 is a long painful slow wave, and that's why we have a fast wave 4 triangle exactly, but exactly at 38%. All right, and then from there, I think I just remembered that it should be. Let me see if I can. Um, just a minute. If it is not here, it's the same thing. See here, this is wave 1, ABC2. Wave 3 is 1.618 of wave 1, and wave 4, it can come in different ways. It's like flat correction, irregular, flat, and regular flat, expanded flat, zigzag. So there are too many formation in Elliott wave. Okay, so I'm not gonna go into that, but usually the measurement is 38%, 38.2%. Whatever it is, it stays within that. Sometimes if it is a zigzag, which is a fast drop, that it can go to 50% or sometimes even 61%. But 90% of the time, you will find wave 4 around 38%, and this is the case here. Okay, so it is a fast drop, 38%. But then wave 5, we go back to the same, and then you see that wave 5 should be around 0.618 of wave 3. Okay, wave 3 was 0.618 more than wave 1, but wave 5, again, it's only should be only 0.618 of wave 3, means shorter than wave 3. Okay, shorter than wave 3. Okay, Marian, if you don't see the Elliott wave, uh, okay, tell me which pair have you tried anywhere in any pair? Just tell me so I can open the chart, and then I'll show it to you. That way, you will know that I'm not prepared from the beginning. I will show you that how you can, because I don't know which one you're gonna suggest right now, right? So go ahead and suggest me anything, and if I can see it, because sometimes you don't see any wave or any patterns. That's why I leave those pairs alone. When you don't see anything, why bother with those pairs? They are ranging and they are doing some nasty things on what we call as a complex correction. Complex corrections are account destroyers. Okay, completely messed. GB, you're talking about pound Aussie chart, right, Jack? Marian, is it okay if Jack is saying that go with the pound Aussie? All right, now you're saying the pound Aussie too. Wow, everybody love pound Aussie, right? Okay, okay. All right, let's go open a pound Aussie chart, and then we see if we can make any sense there, or if not, then at least we will see the measurements, right? And remember, I just explained you two tools: retracement and expansion. Retracement, the major 2 points are 0.618 and 78%. Sometimes the move starts from 50% as well. Those are bad patterns usually. And I'll show it to you. And then the price, the retracement. Now the price breaking the point. Going beyond the starting point, so that then you have to use expansion tool, and expansion, those two levels are 127 and 1.61, right? All right, so giving that, we go on pound Aussie chart. Now see, Elliott, the finding Elliott wave are difficult on 40-minute and 20-minute. They're small charts. They are very small, like 1 hour chart or 4 hour chart. You want to see the higher time frame charts, like you can see here completely. This is like wave 1, 2, 3, 4, 5. That's wave A. Wave B, I just told you the correction. It goes back to last wave 4. Wave 4 was this. It went up over there, last wave 4, and then poof, again drop. The things are there. So I'm going to show it to you. But the thing is that 40-minute charts, sometimes you see, sometimes the measurements are there, calculations are there. For example, the bouncing, the entry points, if usually it comes back in the wave around 50%, 61%, and the 61% is a very powerful number, so you can take it. But looking at the Elliott wave altogether, from wave 1, 2, 3, 4, 5, and ABC corrections, you have to see the higher time frame, even though it is in the shorter time frame as well, but very hard to see and very hard to understand. Higher time frame gives you more. What is this chart? Okay, here. Okay, this drop from here. See, this is a weekly chart. This drop here is a very straight drop, and from here, if you can see, all I can count from this point to this point is 3 waves only. It's just big 1 wave. This is small 2, 3. So we can call it A, B, C. Okay, this is ABC correction. So this whole thing makes it wave A, and you can say this is A, I'm just going fast and random so that I can test myself that how good I am. Whatever I see, I'm just marking. Whoops, not this. Whoops, not this. A, B, and then small c will make this wave A of A correction. Like I said, big chart, sometimes all you see is a big correction, keep correction after correction after correction. So if this is wave A, this small, you see A, B, C, this again small a here, then the price went A, then B, and then C, very small. If you open up on a daily chart, you'll see. So this is B, because what I'm showing you that I can recognize them very easily, and this drop is wave C, and this becomes wave B. Okay, now let's measure from here to here. What is this? 38%, right? Okay, I'm going to show you something now. 38%. After that, you see this bullish engulfing candle with no wicks whatsoever. And that is a sign, very strong sign that it is going again, maybe. And this is the high here, the SNR level also. And we have a very bullish candle here. We ended with no wick whatsoever. So, it's a strong sign that we are going up, and we did, right? Now, if you look at AB is equal to CD pattern, well, I just showed you the chart, for example. Where it go? This. Oh, right here, right here. You see this? This is a Gertley calculation, but not necessarily. I'm just showing you. But what are the extended targets? 100%, 127%, or 1.618%. So now you can put the targets. You want to see that where these targets coming in. 100%. So you use this tool. You place this here, and then you place this, right? And then you notice something. Can you tell me what you notice? Notice and tell me what is it. Where did it go exactly? Anybody? Let me remove this this tool here. Now can you see where it go before turning? All right, exactly. You see, it went straight to 100%. This 127 is there, and then at 100%, what it posted as soon as it hit the 100%. Let me expand it. As soon as it hit the 100% level here, this is AB is equal to CD, 100% correction finish. What it posted here? See this? This is a reversal big doji or shooting star, right? So that is a very strong sign that we are making a turn from there. It's 100% correction finish, A, B, C, three waves. This was A, this is B, and I would say this is C. So that's A, B, C correction, some sort of. If you go on a monthly, you will see the background, what it is, what not, So again, we are doing measurements here with using the fifth tool. I'm not, trying to do the Elliott wave. Otherwise, it will be completely different webinar. So after that, if this is a correction, that's fine. We are turning. So where we are turning, usually the targets, you have to see if it is going to be impulse wave or where this chart is. Hold on just a minute. Okay, this is right. Let me bring it the first chart here. Okay, it's not even a first chart, but this is the one we're doing. Okay, this is a monthly chart. So now, for example, this monthly chart is Fibonacci, right? Okay, so the thing that I was showing you was this A, B, and C, right? But notice that this C is 100% of this calculation, but it was also a 61%. because this was a complete retracement of this drop, this big huge drop here. So you see, long time charts, if you see, then you will understand the Elliott wave, if it is impulse wave or um, you know correction, or you can calculate really easy, and within that you come up with the 40-minute chart or whatever, that if once you know that we are going this way, because this becomes magnetic, right? Remember, I just explained you, if you measure, let me measure it on this one so that you will understand what I'm talking about and where this number is coming from. You see this, from this to this drop here, big drop, 61%, which is a powerful golden mean, is coming exactly at 2.22, and this 100% is coming what? 2.20, right? So they both numbers are very good numbers, strong numbers. AB is equal to CD, exactly at 100%, coming exactly where the 61% of this big drop. So how hard it was actually to just continue trading in that direction. And if you remember or not, I don't know if how many of you remember that I gave this target when we were way down here. I said we're gonna go up. I have those charts. I said we're gonna go up, and then from there we're gonna drop. So this was my target, and we reached there very nice and clean. Okay, I'll show you this. Bella probably remember Ted, or that this was our target in Fibonacci. Remember, going to the upside. 2.24 was my target basically, and we went 2.2377. Okay. For example, if I want to show you guys, then where do I go? Okay, if I go here, I go here. Maybe, I don't know if this computer has those old charts. Where's Fibonacci? I can't see it. Oh, okay. This was, my target was up, but the calculation was all off. It was from here, and AB is equal to CD. I already marked here. See, A, B. See that? I have this marked. This is A, this is B, and then we're going for C. 100% is right there. 2.20. I just showed you. And how long ago? So that was, and the 61%, instead of measuring from here to here, I just measured from there. But then later charts, I fixed that thing, and then it was showing from here to here. But it was like, A, B, and then we were going for C. The target was right here, and we reached that target. This was a long time ago. Okay. Jack, what do you mean the other leg down? The current leg? Yeah, the chart in front of you, the current leg is right here. But the thing is that we need it. Like I'm keep telling you that we need a retracement. But this Brexit thing is killing this pound, this pair. But right now, for example, we are pound Aussie, with the Aussie weakness, the chart that we have now, with the help of that chart, if the chart kicks in, then we may see some retracement to this chart here. This is a recent chart, right? But it is a current chart, by the way. So now, if this is A, B, C, it went up there, right? But you see that we drop also the same fashion. We have only three waves showing here, right? A, then B, and then C. Let's measure that. Let's use this tool the opposite way. Okay, so let me just If I flip it, then you guys gonna get confused. I'm gonna start from here. Okay, from the starting point, this is wave A, right? And then this is, we're gonna start put the place it in the beginning of the wave C, and that would be the end of wave B here, right? And then you see this is 100%, this is 127%, and there is another level which remember 1.128, right? Which is not showing here. Oh, come on, man, what happened? Okay, see, quickly I'll show you how to add it. It's like 112.8 is the area actually, and then you go as FE, oops, FE, it's 1.128, and then percent and dollar sign, right? So that thing will come up with, where did it go? Oh, sorry. I did the opposite actually. This is where 1.128, and this has to be 112.8. Okay, now it pops in here, right? This is the area. All right, so let's measure that again. That's not the very big number. Big number is 127 and 1.618 are the major number. But still there's it's some sort of a Fibonacci number. So we are stopping here. But now let's go and use the retracement tool as well and see what happens and where we are now. So retracement tool, I will use that so that we can read it. Okay. So now you see the 78.6% was here of this drop, and this is 112%, so it's all messed up here, right? It's nothing. So now we're gonna I'm gonna show you now that the last, this is expansion, how you use this retracement tool for the other one is expansion and this is extension. Okay, so I'm gonna measure only wave C and see how far it goes as far as this extension goes for this tool. Now this tool is retracement is only 2-pointer. The wave is this, and then the price, we are measuring this one, right? The C wave of this ABC correction. So we're gonna measure this, and then the price goes beyond this point, and usually it goes to 1.618 or 127 or 1.618, right? 1.27 or 1.618, and those both numbers are butterfly pattern. This harmonic pattern we call butterfly. So it's a small butterfly, goes at 127, finishes at 127%, and the bigger one goes as far as 1.618%. So right now you can see here, this is the pattern that I've been showing you all along, and this is what really happened, and we finish it. Okay, not this one. This one, see, this is the one I made long time ago using this. This is wave C of that thing, right? ABC correction. This was A, this is B, this is C correction. So I pull the fib from here to here. The calculation for the butterfly pattern is that if the B point is 78%, and then the C point is at around 38%, sometimes it goes to 23%, but usually it stops at 38%. Then you go to 127% of the same fib. Extension, not expansion. That this tool is called Fibonacci expansion tool, but this is what the extension levels are. Extensions are only the butterfly patterns or crab patterns, right? So those two levels are very important. So this is the one we hit already. This is expansion level. So you measure basically like three waves, three different ways. One, this tool, this one as a retracement and extension for the targets. And this Fibonacci is Fibonacci expansion is only for the target, and especially in Elliott wave counts. Right? Harmonic pattern, you use this extension, and butterfly pattern usually comes around 1.618. This pattern, you guys know that how far back I have given this pattern. This is the same thing, right? Yeah. If you remember that, based on the same calculation, what I'm just showing it to you, this is how I come up with this thing, which gave me 4,500 pip drop from there to there. I made this chart in 24 March. Just like, just exactly the same calculation and same thinking, which I just showed you that I use. I use this wave, last wave, ABC, ABC correction, the C wave, and then expansion. I saw that 78% and 38%. But why? Uh, you would say that, you don't know, this is what happens. But I would say that no, you do know. And why would I say that? Is because I think this is the harmonic pattern, right? You see, I gave you this chart here. This whole package is, I have given you. You have it. You see this butterfly pattern? You have in the package that I give you in the beginning. This is XA. This first pullback B point is 78.6%. Okay. Then the C point goes here. By the way, where go my webinar thingy? Oh, right here. Okay, I lost it. Okay, so now you see in this diagram, this is a butterfly pattern. Okay, XA 78%, C point, usually C point, I wrote it down here. This is point C is equal to 38% or to 88% of this same XA move. But usually if the same fib, you use the same fib, and it goes to either 38% most of the time or 23% percent line sometimes. In case of this B pullback, it's at 78% because it's a deep pullback. Then it doesn't go to 23% line. It stays around 38%. And then from there, it turns and comes all the way to either 127% or 1.618%. The first level was 127% extension of XA all the way down here. Right? And that is exactly what happened here. And the chart I showed you long time ago, it ended up like this, straight down, no hanky panky. Right now, another chart that I'm working on right now is the other one, which is this, and this one showing some more downside. This is a calculation of a bad pattern, because if bad pattern, for example, if I go back here and I'll look for a bad pattern calculation, which is bullish crap. This, okay, this requires that the B point should be between 38% or 50%, not more than that. And the pattern before, the B point must be 78% for butterfly pattern, right? But for a bad pattern, it should be around 50% most of the time. So let's say this one, if you measure this tool from all the way in the bottom and then go all the way up, then you notice that 50% is right here. Exactly, the price came to 50%. Then the price went to 23% line, exactly to the pip, right? And now dropping. So this is also a big possibility that this price action will finish a bad pattern, which requires the final touch is should be 88% of the same fib, right? And then also A, B, C, D, AB equal to CD pattern. The calculation is also coming 127 is in the same vicinity. You see this tool here? This one? Okay, so the 100% is here, 127 is here. So one other level of AB is equal to CD pattern, that's 127, expansion level is coming exactly at the area of a bad pattern finishing. So this is also a big possibility. So either we're gonna either kick in this pattern will kick in, and then we go back to this if we're going to the upside. So we, this is the station. This is the station. If we, like I said, we always go and stop at the bus station, and then we make a move. When we make a move, we should know that where we are going. Doesn't matter up or down, as long as you know where we are going. If we are going up, then we are going to these areas, either this low and these two lows. If you are going down, now you know that you are going down to finish up a bad pattern around these, areas. So this is, again, you see this tool here. I use from here. This is the first butterfly pattern. I use only this length here. This is the wave C of a correction. In this one, I started from the beginning point of this ABC correction, complete correction. From here, this A, B, C, and 100%, 78% is coming here, and we poke into it, right? Poke below it actually. So it's a good chance that we will simply drop to 88% to finish up a bad pattern. And it is also we poke below 100% of this AB is equal to CD pattern. So we have a good chance that we will go to this 127%. So 127% and 88% is in the same vicinity as point D. It's a major point, so it's a big low here. You see, this is the biggest low point here. See, after this drop here, this is the biggest low. And then if once you go above these highs, that means the turn is imminent. You're making the turn. Otherwise, you are used like, low and low and keep coming, keep coming. What do you mean on the other? No, on the other chart. On the other chart means this one. No, no, no. See, that's the thing. You're talking about this. How do we know that this is X point? This is the end of the wave B. You have to count. Remember, I just counted in the other chart here. This is ABCA. This is ABCB, and then this is C. Okay. So either you use the whole thing or you use this one to measure. These are the two lows here. This one and this one going up here, right? This is the lowest point, and then this is the B point, the wave B ending here. So this is wave 1, this is wave 2, this is wave 3, this is wave A, this is wave B, wave C. Either you measure against the whole ABC correction, or you measure only for the C correction. So this is how I used first this one, which we got to this point where it's supposed to come at butterfly pattern, finishing a 127% extension of this. But if you use from all the way down here, then the bad pattern correction is still coming. There's still, more to come there. And if it doesn't, and if we kick in from here to go to the upside, then I would say the first target would be this one here. Okay. And but that we also have to see that, if the patterns and calculations are there, but the thing is that how the fundamentals are coming in, that is also very, very important. Okay, they can change. If we have any good news about, for example, let's say pound, then we would say that this bad pattern will kick in, and it is kicking in, right? So this pattern is kick in, and then we will see pound Aussie going up and fulfilling the this bad pattern completion, and then first target would be the the connecting line of point A and B, these two lines. Okay, so first level would be this one if we are going to the upside, if this pattern is going to play out. So this would be, first the starting point, the second, this is the one measure, and then if we break that, then it will be the third, let's say third target would be the TL, the fourth would be this high, the next this high. So step by step we go, and each time we hit one of these levels, we pull back. So we have to be careful that, once we get to this level low here, right, price will come here and then will pull back down to maybe this low here, to this high, right? And then go again, hit the TL and dip a little bit, then break the TL and then go to this high and then dip a little bit back to this high maybe. So this is how we make the wave, so that we can go, one level at a time to the upside. For example, here you see this one. If you draw this, see this is the high here. Let me see here. This is small high, gave you this bounce here, right? Then, oh man, okay. Now then, see this high, or should I say, just keep measuring that. This high gave you this bounce, all right? So this is how it is. It hits the higher area and then comes back and tests whatever the level it breaks and then keeps going. So this is how you use this. This one is the retracement tool is for retracement and extension to 127 and 1.618 for a butterfly pattern calculation. And this is the tool usually you use in Elliott wave count, wave 3, wave 4, in wave 5 measurement. We were using USDX, right? I just remember to show something there, I forgot. All right, see wave 5, yeah, I wanted to show you that wave 5 is usually 61% of wave 3. We never measured that, so I just want to do that to see, show you that wave 5, how we did here. So we're going to measure wave 3. So wave 3, and we will put this here in wave 4. Oh, so this tool, I messed up, man. This is only 100%. Where the other levels, maybe right here. Here you is. No, this is not the one, man. The tool. Okay, here. Oh, right here. Let me grab this one here. Okay, and then all right. So I'm gonna take this one out here, and then draw it again. All the levels. So we need 61.8%, which is right here. 50% is this, and 61% is right here. So we came very close to the level, never touched it, but we came very close, right? We went above this wave 3, which is fine, and this is like an ending diagonal, painful diagonal, slow, and then we came very close to this area. Usually 61%, but it's above 50% and below 61%, and it's in the vicinity for wave 5. So sometimes wave 5 is what do you call, is like a truncated, which is usually end up below wave 3. It's somewhere here, very shallow and messed up wave, and then it drops. So that wave 5, we call it wave 5 truncated. But this is a normal wave 5, slow, and it went up there in that same area we're supposed to, and then from there it drops, not quite in the territory of the last wave 4, but you can call it wave 1, and then this is wave 2 I'm calling, and then wave 3 could be a big wave like wave 1, 2, and then 3, and the 4, and the 5, and that will be completing, wave 2 of this. If this whole thing is wave 1, then you have wave 2 somewhere here. For example, if I go to measure, so the 61% is coming here in this area, 50% is here in this area. If you measure this from here only, then you have 60% is coming into this area here. 78% is this high here. So, time will tell where we're gonna go, but let's see if we start going to the downside on this USDX. So far, it is making this A, B, C to the upside. So it's 1 hour 15 minutes. I don't want to mess up the recording, so that's what I said. If I go into Elliott wave, it's gonna be, it has to be another webinar. But general idea that how to use this, retracement, and just keep measuring that, from different angles, different areas, different lengths, and especially when you have harmonic patterns, all those diagrams, understand them, and then you start trying to find out if there's a perfect calculation already for wave 1, 2, 3, or maybe A, B, C, D, uh, or A, B, C point, and you try to catch a C point, and then from there, from C to D, just like I showed you on a pound Aussie chart, that we can trade all the way to the downside, 4,500 pip drop. uh, so you can catch it. By the way, Euro Aussie, just I just showed you in the beginning. It was hitting at 23% line, so it can make a turn. This is the same thing is happening here. You can see here. I'll use this fib here. This is 78%, and we went straight, not 38%. We wobble here a little bit, but then we went up to 23% line, and we are pulling back. So if we stop here, and we can make a turn to the downside, that would be pound getting strong and euro getting weaker. Okay, and if that is happening, then you know that pound is getting strong or euro getting weaker, and then we see their charts, right? Their individual, euro chart and pound chart, and then if that is the case, if we find that, yeah, okay, really euro is dropping, pound is not doing anything, or euro is not doing anything and pound is getting strong, then we can trade pound pairs accordingly. Okay, and to drop this one down here, we need pound strength or euro weakness. So I'm gonna keep an eye on this chart as well. See, this is our 23% line, very, very important line. And after this, so this could be a butterfly if XA, this is B at 78%, C at 127%, D could be 127%. Is that possible? I don't know. Time will tell. Okay, so we need to play with the calculation. Keep playing with that, and this is one calculation, but it doesn't look possible right now, giving the Brexit condition and all that. But U.S. Election will, can make a big difference, and make the impossible possible. Okay, so, and we have only a few days left for that, maybe 8-9 days, right? Yeah. So I'm gonna close it now, and don't want to mess up the recording. I hope that I explained something, Marian, and if you still don't understand, then we can talk about it. Just tell me, email me and tell me that, if I don't understand still, I'm confused or this and that, anything, uh, any aspect of this whole thing, then I'll, do another webinar and try to explain that. Okay. Any one of you, if you don't understand anything, just email me, and, I'll do it. Okay. I'll do it again if you have to. Right. See, the thing is that I have to explain you the Elliott wave one day. Elliott waves, how to find them, and which time frame to start from. You will see them on most of those time frames, all of them. Okay. So that way you will understand, and then you will be able to start measuring them. Okay. Maybe during this week I'll do an Elliott wave basic Elliott wave webinar. Okay. All right, so let me go now, and I'll convert the recording and then send out. All right. Okay. Bye bye.